Yes, hello. Thanks for coming back. Uh, really had some challenges yesterday, so I couldn't get it done properly. But I'm sure we were able to establish our levels. So this today, I'm going back again to the chat. I want to quickly go go over it again as we did yesterday. So yesterday we talked about other blocks, right? And this level, we established the fact that the blue box here where it's been highlighted is an order block that needs to be retested. So looking back at the market pumped from that particular level, came up, came to retest here, and it went up again. But then the bullish trend wasn't established. It had to come down. And how did it come down? If you look at the market, there was a higher high here. But if you come back to the RSI, there was a lower low. So if it happens like this, we call it, sorry, so there was the market printed a higher high on the chart, but a lower low, on the RSI. So that is our bearish divergence. And once it happens like this, you realize uh, the market has to again change gears. I mean, go from a bullish structure to a bearish. The moment this particular low is taken, where the hand is taken, that means the market has changed gears now. The market is now bearish. So it violated, it came to retest this other block. Mind you, this blue box is another other block that needed to be filled or retested. So the market came into it and then went back again. So at the moment, the market came to retest this other block as well, the red box, right? So here we've established the fact that the market is bearish. Yeah. So what is an order block and what is a breaker? Maybe I'll have time to talk about other blocks and breaker the next time we meet. But here, this order block that was retested here was violated. The market retested it and was supposed to get down to this order block here where the market is highlighted around the $10,000 level or the $12,000 level. But you see, the market couldn't get there. So this gives us a clue that it's very possible that the market can come to fill that liquidity void. It's called a liquidity void because it's from this red candle that the market broke this high and then this high. All right. So that is an order block. So the market is very likely to come and retest that order block again, right? So we've established that fact that this other block hasn't been retested. So let's go back and then see whether the market is reversing and then coming back to this other block. All right. So at this level, right on the blue box here, that is another block that has been turned a breaker. If you look at that other block, you realize there's another bearish divergence that has been formed, right? And it is giving us clue that the market is likely to drop or go down from that level. There was a higher high that was formed on the chart, but on the RSI there was a lower low. So this is the weekly chart. So let's go back to our daily chart and then see what is going on the daily chart. Okay, so this is our daily chart. This is our daily chart. Okay, so that is our bearish divergence. Let me first delete this trend line here. So that's our bearish divergence. And looking at the market, before this high was taken, There was a very small box, a small red candle here prior to breaking of this higher. So in that sense, that candle becomes our breaker. The moment the market breaks down, it will definitely come to retest it. And most at times, right on a breaker, an order block will be formed. So that's this green. There is an order block that has been formed there. It was violated, and the market came to retest that order block. That's the green small box the arrow is pointing on. It came to retest it and it dropped down again. But you see, the blue box here is also an order block. The market was supposed to retest it and then move higher. But in this sense, the market broke down the broke below that order block. So that is giving us a clue that the order block will turn into a breaker now, and the market wants to really come down. So this is what the market is likely to do. Right now, we have established the fact that the market wants to go down. So any movement or pump from this level of is a fake pump. It's a pump to either distract investors or retail investors. So any movement from this level here up is a fake pump. So what the market is likely to do is a minute. What the market is likely to do is retest this order block, the blue box here, and then drop down. So the market can go this way. After breaking, let me go to, okay, this is the daily. So after breaking, the market can just go up to retest the blue here and continue down. And I think that is being established already. Right. So let's look at it now. So you see, it became a breaker. The order block was violated, and now it becomes a breaker. So it's like that the market will retest it and then drop down, or the market can go as higher as, or the market can even go up high, even to these levels, and then drop down again. So we've established that fact that the market wants to truly come down. So these are the scenarios the market will follow to come down. So let's look out for other confluences. All right. So let's go back to our weekly chart and see what is going on. I know most of you are conversant or know what a trend line is. All right. Basically, a trend line. This is a trend line. Yes. So if you are to draw the trend line, you realize that our trend line has been broken. Our trend line, that is the green line here, has been broken. So what usually happens is when a trend line is broken, the market comes down to retest the trend line and then drops. So looking at our arrows here, you realize that there's so much confluence here that the market still wants to go down. It's either the market will retest the blue line and then drop further, or go up higher to retest our trend line levels and then drop. So any movement down, any movement up is a fake pump. We've already established that fact that the market wants to go down. Let's go to our 4-hour market and see what is going on there. Okay. So you see, this was the blue box that was drawn. that the market is likely to go to. So if you look at it, the market came down and it ate a little deeper into our blue box. But as to when to come, if there's so much volume, the market is going to drop further from that level. But if the market should go a little up, it means you can go up and then drop again. But in whatever case, from my analysis, I think the market is already giving us the fact, a clue that it wants to go down. So any movement up is a fake pump, right? So we know that the market is coming down, but where is the market likely to go to? Where is the market likely to go to? Let me delete this arrow here. Yeah, yeah. Where is the market likely to go to? So remember, this blue box here was the other block I was talking about. This particular blue box here, which is yet to be retested, and there is a liquidity void here. So there's more higher chance the market is likely to drop here. So my first level I'm looking at for the market to touch is the $12,000 level. It's 11,600, or less approximately the $12,000 level, which also corresponds confluence has confluence with our other block. Right. So that's the first level I'm looking at. The moment this low is broken, the market is likely to take out this low here. Mhm. That is the green line I've drawn. Once it gets taken, it will move a little upper and then drop down again. And then after that low is taken, it can still take out this low, and then once this low is taken, the very lowest one, around the 16,000, the next level I'm looking at is the 12,000, approximately $12,000 level, which has confluence with our other block that is yet to be filled. All right. So in the extreme, let's go and use our Fibonacci tool here. All right. So I'm trying to get other levels the market is likely to get to by using or predicting our Fibonacci tool. Okay, that is it. We have a Fibonacci tool, and after the $12,000 level, the second level I'm looking at is at 6,439 levels. 6,439 level. That is the next level I'm looking at, because that is the 6,439 level. That is the level for the Fibonacci tool. 6,439 level. So definitely, if these lows are taken, the market is likely to touch our 6,000 levels. And the third level I'm expecting Bitcoin to get to is the 2,541 levels. So approximately the $3,000 levels. Why? Because this level where the arrow is pointing and this here is a double bottom that needs to be cleared. That means there are stops here, and the people have already people have their stop losses here, and that level needs to be cleared. So in that case, it means the market or is likely to attract that levels and clear those stops before the market moves up, or if there's any movement up, the market goes bullish. Right. So these are the three levels I am looking at currently. The first level, after establishing the fact that the market wants to come down, our first level is the $12,000 level. Our second level is around the $6,000 level, and our third level is around the $3,000 level. If there is more volume, I won't be surprised if Bitcoin drops down to the hundreds level. Yeah. So these are the levels I'm looking at for Bitcoin. In fact, this is not financial advice. This is my own analysis. It's not guaranteed to happen 100%, but maybe you can pay attention to it. Yeah. Well, at the moment, it's very, very bearish. If Bitcoin happens to move above this red or pink box, the market turns bullish. But as it stands now, it's bearish and the market wants to come down further. So these are our levels. Thank you very, very much. Let me recap it again. My first level I'm looking at is the $12,000 level. The second levels I'm looking at is the 6,039, that is $6,000 level. The third level is around 2,500, or let's say the $3,000 level. And our last level will be in the hundreds. This is what I'm looking at for Bitcoin. So for with my bias, Bitcoin is definitely coming down. Right. Thanks very much for joining. You can make sure you subscribe to my channel and then click on the notification bell. I'll be uploading more of my analysis here. Thank you very much and see you another time.